The dying question this year, can you file taxes after April 15th? Short answer, yes. Yes, you can file taxes after April 15th. There is no penalty for filing your taxes after April 15th if you don't owe the IRS any money. But there may be penalties and fines for paying your old taxes late or filing your taxes late when you owe money to the IRS. Basically, if you know you owe money, government money, and you purposely file your taxes late, then your late filing incurs fees 10 times greater than those assessed for paying your taxes late. First, even if you owe taxes to either government, file tax paperwork by the tax deadline, or get an extension and file taxes by the deadline of your extension. The deadline for wage earners and the self-employment who are sole proprietors or independent contractor is April 15th. So what happens if you're late filing your taxes? Depends. Depends on whether you are supposed to get a refund or pay taxes to the IRS. Let's start with the refund scenario. If you're supposed to be getting a refund and you file your taxes late, your refund will be delayed. If you wait for more than 3 years to file your taxes, you won't get your refund, no tax refund at all. Note, the IRS has more than $1.5 billion in taxpayer refund that have not been claimed because some taxpayers haven't filed their taxes since 2018. If you owe taxes, just really try not to be late paying your old taxes. Why? If you owe taxes to the IRS and you file late, you're gonna end up owing a lot more money to the IRS. Let's look at some potential outcomes. Failure to file will cost you 5% of the unpaid taxes for each month it's unpaid, with a cap of 25% of the total unpaid taxes at 5 months. So you could end up owing your unpaid taxes plus 25% of the amount owed because you filed your taxes late. Failure to pay will cost you 0.5% of the unpaid tax amount for each month the debt is outstanding, with maximum amount of 25% at 50 months. In total, you're paying your back taxes plus 25% of the unpaid taxes because you paid them late. Just so you know, penalties for partial months are always rounded up. For instance, if you pay 5 weeks late, that's 1 month and 1 week late. The debt owed is for being 8 weeks late. That means it's like you didn't pay your bill for 2 months. Yes, it's rounded up that much. Still, remember paying late incurs a 5% late fee, but the penalty for filing late is 10 times more than the penalty for failing to pay the taxes owed to the IRS on time. What about interest fees? Not to be unkind, but the IRS will kick you when you're down. Yeah, it's kind of evil. It will require you to pay interest on your end penalty fees. The interest fee is the federal short-term rate plus 3%. The federal short-term changes every quarter, so I can't tell you exactly what that is. Let's look at one example to make this more real for you. On April 1st, 2022, the federal short-term rate was 4%. So the IRS interest on penalties was the federal short-term rate of 4% plus the 3%, which equals 7%. In total, taxpayers who were late paying their taxes and had to pay interest on them were paying an interest rate of 7% on it. So let's see what happens to poor Mickey, who owes the IRS $999. For this example, we're going to use the federal short-term rate of 4% from April 1st, 2022, just so we're all on the same page. So Mickey failed to file his taxes and he owed the tax IRS money. We know he must pay the penalty. The penalty for failing to file his taxes is 5% times $999 times 5 months. So Mickey pays $249.75 just in penalty for his failure to file penalty. Next, Mickey fails to pay the penalty for 5 months. That is 0.5% times $999 times 5 months. So Mickey must pay $24.98 as a penalty for paying his taxes late. Note, the $24.98 is not charged to Mickey while his failure to file penalty applies. Now, what is Mickey's interest on taxes owed? Well, that is 7% multiplied by $999 divided by 365 days in a year multiplied by 153 days. So his accrued interest is $29.31. So because Mickey owed the IRS $999 in back taxes, didn't file his tax return by the deadline, and didn't pay his taxes for 5 months, Mickey is required to pay the IRS $1,000 plus $250 plus $29.15, and his total bill is going to be $1,279.06. In short, Mickey must now pay $279.15 more than you would have had to pay if he had just paid his taxes on time. And by on time, I mean April 15th. This problem can be made even worse if Mickey is a freelancer who didn't make his quarterly tax payments during the tax year. If Mickey owes less than $1,000, by law, he only has to pay his taxes once a year. But if Mickey thinks that he may have to pay more than $1,000 on his income from his independent contractor work or his freelance work, then Mickey should make quarterly payments to IRS so he does not owe any taxes for any quarters during the tax year. If he does not do this, he's gonna be charged an underpayment penalty for it all. So are there other things to be concerned about? Yes. Self-employed people must pay their own Medicare and Social Security taxes. Guess what? Don't pay them, you may miss out on retirement or disability benefits in the future when you really need them. The IRS expects taxpayers to pay at least 90% of the taxes due every quarter if they're self-employed, an independent contractor, or a solo entrepreneur. If you paid less than the minimum, which is 90% owed taxes for your work done as an independent contractor or a self-employed person, then the IRS will charge you 0.5% interest per month on the amount of unpaid taxes. In short, swallow that bitter tasting tax pill and pay your quarterly taxes. Your outstanding IRS debt has strict timelines. Outstanding tax debt are due within 21 days receiving notice in the mail from the IRS. If you owe more than $100,000, it's due in 10 days. Failure to pay your taxes on time results in a penalty that is capped at 25% of your unpaid taxes. Failure to file penalty is the most financially painful penalty levied by the IRS. It's generally 5% of the amount you owed for each month or part of a month that you return is late, with a maximum penalty of 25% of the amount owed. If you file your tax paperwork more than 60 days late, the minimum penalty you must pay is $435 or the balance of taxes due if they are less than $435. Failure to pay your taxes and to file your tax paperwork on time has two penalties, and together they max out at 47.5% unpaid taxes, 22.5% for failure to pay on time, and 25% is for late payments of your old taxes. What about those pesky IRS notice? When are they gonna hit me? For those of you who like to push the limits of how far you can go before you feel the pain of not paying your taxes on time, consider this. The IRS will send you notices that you owe taxes. Then it'll take out a tax lien on all your assets, if you have any. Then it will move on to property seizures. And finally, if that fails, it'll take you to court and possibly send you to jail for tax evasion. The IRS is not to be played with. So how does this go? First, IRS will mail you a notice requesting payment of unpaid taxes. And in the most extreme cases, the IRS will pursue criminal charges against you for tax evasion, which can result in you being fined by the tax court, and you may even be sent to tax jail. If it does not receive the money, it will then send you a notice of federal tax liens on your asset as the next step. Asset like your house, car, and bank account. If this does not get you to send IRS its money, it will then begin seizing your assets to pay your tax debt. The levies that it puts on your asset in order to seize them to pay your tax debt include garnished wages, money seized from your bank account, and seizure and sale of your vehicle and or real estate. Best to avoid this course of action because once the IRS goes down this road, it's hard for it to change course. Now, you're wondering, can I ever file my tax late while becoming a poster child for poverty? Well, yes, you can, and you won't be improvised when you do it. There are 3 ways for you to file your taxes without paying penalties if you owe money to IRS. Pay careful attention though. These examples require you to pay your taxes on time, but you're still filing late while paying penalties, fines, and interest. Number 1 thing you should do is file for a tax extension. You can complete Form 4868 and mail it to the IRS, or you can use a free electronic free file to do the same thing for you. The extension gives you 6 months, which means up to October 15 to submit your tax return. For this to work, file for the tax filing return and pay your taxes by the regular tax deadline, April 15, but it'll give you 6 more months to figure out your tax filing situation. Next, if you're an overseas resident, they are in a different situation. If you're living overseas and a US citizen or resident immigrant who is living in another country, when the tax deadline hits, have your main place of business be outside the US, then great news. The IRS automatically grants you an extra 2 months to file your tax return. No need to file an extension. The next exception is military and on duty personnel outside the USA. In this instance, IRS automatically extends your tax filing deadline to June 15, no questions asked. Next thing I want you guys to do it with me, is let's look at the worst case scenarios. You missed the tax deadline. You forgot to do the extension for filing your taxes. You're not eligible for an automatic extension, and you owe the IRS money. First, assuming you're not one of those delinquent tax filers who haven't filed taxes in years, just face the music and get back on top of things. Just file your taxes. Electronically filing your taxes is the fastest way to get your tax return to IRS. This immediately stops the accrual of penalties, interest, and fees. Second, the IRS is not completely heartless. You can apply for an IRS payment plan. Their payment plans have multiple payment options. There are short-term payment plans and monthly installment agreements. These plans will stop penalties and interest on your IRS debt. Plus, the delay penalties won't affect your future tax refunds or your credit scores. Moreover, you won't have problem getting loans because of bad credit reports. There's this warning I must give you. You must pay the fees to set up the payment plan with IRS, or they won't allow you to open it. The fees can be waived if the payment plan is less than 120 days or if you're considered low income. If you can pay your debt in 180 days or less, get a short-term IRS payment plan. It costs nothing, but you're still accruing penalties and interest until the debt is paid off. You can do this by applying online on the IRS website or at a local IRS office. Do you need longer than 180 days to pay off your debt? Apply for a long-term installment plan. It costs $31 for automatic monthly bank payments via direct debit or $130 for non-direct debit payments. If you're low income or one of those people with adjusted gross income at or below 250% of the federal poverty guidelines, the fees will be waived for the direct debit installment plans, or you can pay $43 for the non-direct debit plans. Also consider borrowing money to pay off your tax debts. You can pay it off using your credit card or get a new credit card with an introductory APR of 0%. Assuming that you pay off your tax debt before the introductory APR ends, this is a great way for you to pay off your IRS debt with no interest or penalty fees. If you have a large tax debt, consider a consolidation plan. It may have lower fees and interest than an IRS payment plan. Lastly, remember to use tax software to stay on top of your taxes. Tax software can help you avoid missing tax deadlines. Taxpayers often miss deadlines because they are distracted by life, work, family, personal problems, or just anything not related to taxes. In life, there's so much to do and so little time to do it that filing paperwork with IRS probably doesn't make the top 10 list of things for most people. Furthermore, most people don't think filing your taxes is fun. They tend to put it off until it just can't be avoided any longer. Word to the wise, don't play hide and seek with IRS. You're not gonna win. The IRS is relentless when it finds out that you owe its money, and it will come for its money. Do your taxes, file them by the deadline, regular or extended, but mostly just pay your taxes on time. For more information on filing your taxes, dealing with IRS, or just paying your taxes, subscribe to my channel. And remember, hit that thumbs up if you learned something from this video. If you have a comment or a question or something I didn't get to cover on this video, leave me a comment. We'd love to write you back and give you the answer you need, and maybe even feature you in our next video. Thanks so much, and hope you have a great tax season. Alan, out.